Hello everyone, welcome to ScorHigh. In a current affairs analysis series, today we will be discussing the topic what is merchant discount rate, that is MDR, and why does it matter. Now this MDR was in news recently and we will be discussing this topic in depth. This is useful for your general awareness and even for the topic economy. Now let's see what's the news first. There are reports that several non-bank payment service providers are claiming that they are staring at a shutdown thanks to a recent budget announcement by the Finance Minister Nirmala Sitharaman. Now, first the question arises, what are non-bank payment service providers? Now, these non-bank payment service providers, they offer shops online services for accepting electronic payments by a variety of payment methods including credit card, bank-based payments such as direct debit, bank transfer and real-time bank transfer based on online banking. There are various examples of non-bank payment service providers as PayPal, Razorpay, etc. Now, first is, what was the budget announcement? In a speech, Finance Minister Nirmala Sitharaman announced a slew of steps aimed at promoting digital payments and a less cash economy. Now, in particular, she said there are low-cost digital modes of payment such as Bheem UPI, UPI QR code, Aadhaar Pay, certain debit cards, NEFT, RTGS, etc., which can be used to promote less cash economy. I therefore propose that the business establishments with an annual turnover more than 50 crore, now this is important, with an annual turnover more than 50 crore shall offer such low-cost digital modes of payment to their customers, and no charges or MDR shall be imposed on customers as well as merchants. Now, so in other words, the government has mandated that neither the customers nor the merchants will have to pay the so-called merchant discount rate while transacting digital payments. Now first the question arises, what is merchant discount rate? Merchant discount rate, alternatively referred to as the transaction discount rate or TDR, is the sum total of all the charges and taxes that a digital payment entails. For instance, the MDR includes bank charges, which a bank charges customers and merchants for allowing payments to be made digitally. And similarly, MDR also includes the processing charges that a payments aggregator has to pay to online or mobile wallets or indeed to banks for their services. Now let's see the working of MDR. Now how does MDR work? Now if a card is swiped for rupees 100, the bank cuts MDR of rupee 1 in this case. Now how is this rupee 1 distributed? This rupee 1 is shared between the card issuing bank, payment network, that may be MasterCard, Visa or RuPay, and the bank that has provided the POS machine. So for example, your card has been issued by the HDFC Bank, your payment network is MasterCard, and the bank that has provided the POS machine is SBI. So this rupee 1 will be divided between HDFC, MasterCard and SBI. So when the card is swiped for rupee 1, the bank will cut a rupee 1 MDR, and then the 99 rupees will go to the remaining 99 will go to the petrol pump. The bank merchant deal doesn't allow the retailer, here the petrol pump owner, to pass on the MDR charge to the buyer. Now here the petrol pump owner cannot charge MDR from the customer. This is the working of MDR. Now who will bear the MDR cost? In a speech, the Finance Minister has said that RBI and banks will absorb these costs from the savings that will accrue to them on account of handling less cash as people move to these digital modes of payment. And necessary amendments are being made in the Income Tax Act and the Payments and Settlement Systems Act 2007 to give effect to these provisions. Now, she has said that the RBI and banks will absorb these costs because as people will move to digital modes of payment, the banks and the RBI has to handle less cash, and that will obviously save them the time and the money. Now, why are non-bank payment service providers complaining? Now, what is their complaint? Over here, the MDR has not been made zero, which is the public perception that the MDR has been made zero, but it has not been made zero. The finance minister's decision has just shifted its incidence onto the RBI and banks. So now the banks will accrue the cost. However, if banks pay for the MDR, it will adversely kill their likelihood to adopt the digital payments architecture. Moreover, many payments providers apprehend that the banks will find a way of passing on the costs to them, and this in turn will negatively impact the health of the sector that needs nurturing. Already our banks are burdened under the ever increasing non-performing assets, and now with this step they will also have to bear the cost of the MDR, and so there is a feeling that these costs will be transferred to the customers in some way or the other. Now, this was all for this topic. For various other current affairs updates, you can visit our website, that is www.scorhigh.com, or you can even follow us on Instagram. Our Instagram handle is score_high. So that's all for today. We'll be meeting again with a new topic. Thank you so much.